I've seen some of the educational materials that BlackRock puts out, and it really does frame Bitcoin as this unique asset class that protects against currency debasement. Larry Fink has gone out publicly and discussed that as one of the investment cases. Can you dig into that a little bit? Because we have seen that, we're running multi-trillion-dollar fiscal deficits. We're probably going to need to print more in this money printing, debt-based economy that we have. And so how does someone protect their savings with a tool like Bitcoin?
Yeah, well, it's interesting because that concept is relatively novel to a lot of Americans. And frankly, the older you are, the more outlandish it seems because, think of someone who's born in the, late 40s or 50s or even 60s in the US. They got to enjoy the most incredible run of prosperity, generally peace, and stable currency that has ever existed in the history of humanity, right? Now, if you go to other parts of the world where that has not been the norm, you see much higher levels of adoption than we've had historically in the US. So think about Latin America, where, that's obviously a region that has dealt with a lot of currency crises and sovereign debt challenges and bouts of high inflation. So in Latin America, the rates of Bitcoin adoption are far higher than they are in anywhere else in the world. Now we're starting to see in more parts of the world, even in places like the US and Europe, where historically people have enjoyed quite stable currencies, democratic institutions, protections, et cetera, but they're seeing the value proposition of this. And so when you think about it against this backdrop of growing concern over US fiscal sustainability, for one, there's only two assets that have emerged, maybe three if we count silver, in the last multiple thousands of years that became globally adopted as a monetary alternative. Gold, you could say silver at some point, less so today, and Bitcoin. So that's an incredible achievement for Bitcoin. Obviously, Bitcoin is newer than gold. It's more volatile than gold. It's risky as a kind of novel technology instrument, but it also has a lot in its favor as something that is digitally native in an increasingly digital world that is efficient to store and can be moved anywhere in the world in near real time and near zero cost. So Bitcoin has registered in the arena as a real competitor, real option in that space of things, of a small space of things that you can use to kind of play this debasement trade. And we've seen that resonate.
There's been a lot of progress in terms of Bitcoin adoption at a greater scale, but I feel like there's also still a lot of pushback, especially from the TradFi world. What types of pushback concerns do you get, and how do you address them?
Overwhelmingly, it's one big thing, which is, why is a trade correlated sometimes? And so a lot of the thesis for the marginal adopter today, particularly if we think about a financial advisor and institution, is about the role it can play in a portfolio. If you look at it, it's a global, decentralized, scarce monetary instrument that exists outside of any one country's economic, political, monetary risk factors. Well, that's something that has a very unique set of return drivers and risk factors, right? So you put that in a portfolio, should have great diversification. And it also has opportunity to shine in some of the most troubling moments for the other assets in the portfolio, right? When you think about inflation, monetary debasement, political and geopolitical instability, et cetera. But what's happened is this absolutely extraordinary own goal that crypto has scored on itself over and over again by deciding to label Bitcoin as a risk asset. And for one, this is a dubious concept at the best of times. It's even worse when you try to apply it to Bitcoin because not all risks are created equal. And Bitcoin is absolutely a risky asset on a standalone basis. As I said, it's emerging technology, it's relatively novel, but very different things count as risks to different assets, right? Instead, we see this bundling of a singular concept of risk on, risk off, risk appetite. Makes no fundamental sense, frankly. But if you repeat it enough times, which our industry has, then you start to just program people to reflexively trade like that. And so that's what we've started to see now in lots of episodes. And it just becomes sort of self-reinforcing. If you look at any of the crypto sort of daily research that comes out, it's all about, these random macro factors that have absolutely nothing to do with crypto, manufacturing index, non-farm payrolls, whatever. Like now we take those as indicators of where Bitcoin should move. Why? Because we're lacking in otherwise everyday things to talk about as what's going to move the price and drive trading activity. Well, the reality is there's probably only 2 or 3 things in an entire year that actually impact the fundamental long-term prospects of Bitcoin. That just doesn't give people a lot to write about. But unfortunately, the sad consequence of it is we've kind of bungled the narrative and confused a lot of people from traditional finance who otherwise would be eagerly adopting.
Is one of the drivers for Bitcoin's price liquidity?
Certainly. So there are, to taking my point of this whole risk off, risk on framing as being, very misleading and not a useful tool in the context of Bitcoin. That said, there's a couple of macro variables where actually it does make some fundamental sense to see a little bit of correlation. And it's all sort of in the family of, you can call it liquidity. I prefer to call it real interest rates, US dollar, real interest rates, US dollar strength or weakness, all those things which kind of move together or inversely, right? Liquidity up, US dollar down, real interest rates down, and vice versa if liquidity is in the other direction. That definitely impacts Bitcoin just as it does gold, just as it does emerging market currencies, and just as it does most of the assets in the portfolio. So today, for example, that is what's driving the market basically, is there's been a re-rating of how likely we are to get a rate cut at the next Fed meeting. That's something you would actually expect Bitcoin to be affected by, like the rest of the market. But that's just this type of risk factor, right? When something completely different happens, let's say a geopolitical flare-up somewhere in the world, that's a totally different story. That's probably a catalyst for Bitcoin, right? Because again, Bitcoin exists outside of any one country's economic, political, et cetera, risk factors. But people get confused and they start to just program that risk on narrative into everything.
Right. Well, sure. Something could happen overnight or on a weekend, and Bitcoin's highly liquid and it trades 24/7. So it might sell off immediately, but then it usually recovers and performs really, really well. I think that's been in some of your research as well, is that after some of these political events or geopolitical rifts and shifts that we've seen, Bitcoin tends to actually outperform. This year, we have seen gold perform very, very well. And that's usually a signal for Bitcoin to eventually catch up and outperform gold. Do you think that that's eventually going to happen? What are the forecasts that you're projecting?
Well, they have a lot of the same risk and return drivers, but they kind of seem to take turns. And so late 2024, a good chunk of 2025, it was Bitcoin that was off to the races and gold was, only up modestly. Now gold has had this incredible run and Bitcoin has been, flat to down for the last month. And I haven't got to the bottom of why they sort of take turns like that, but the thesis for investing in gold and the thesis for investing in Bitcoin for a lot of people has a lot of overlap. Now, you look at a day like today, gold was off sharply this morning too. Why? Because it's about interest rates, and interest rates are something that all these assets actually, it makes fundamental sense for them to be correlated on.